So in this chapter, we'll be discussing about auto loans. There is one more product that banks offer to retail customers. Even for companies, they offer this. So banks finance loans for purchase of vehicles like bikes, cars, multi-utility vehicles, and SUVs. These are called auto loans. So here you have to understand a term called on-road price. Okay. So on-road price includes registration, insurance, extended warranty, total service package, annual maintenance. So all this will be added to the basic cost of the vehicle. So banks will be usually be financing around 85% of the on-road price. This again varies from bank to bank, but usually it's around 85% of the on-road price. Then interest will be calculated using the daily reducing balance method. Repayment is usually up to 84 months. And banks will be taking some income criteria for before giving this loan, like annual income of the person. The applicant should be minimum 2.5 lakhs, something like that. Depends on the bank to bank. Then the maximum loan amount again depends on the bank. It will be like 48 times of the net monthly income. And banks, we discussed earlier while discussing checks. While giving loans, banks usually insist for post-dated checks. So usually they'll be asking for 6 post-dated checks. Okay. So wherever ECS is available, we have discussed this also. ECS bank will be making use of the service because it's a paperless debit process. So every month you need not pay. You need not go to the bank and pay installment, or you need not issue check. Just automatically will be done through ECS. Then the security will be hypothecation. We discussed earlier about hypothecation, pledge, mortgage. If you remember, here it's a hypothecation because the ownership will be with the borrower, the loan borrower. Okay, so the bank will not be taking possession of the vehicle. There is no fun in that. Okay, the person needs the vehicle. So this is hypothecation. Okay, so the security will be hypothecation of that vehicle to the bank, and also on the C book it will be mentioned. If you're taken a loan from a bank to purchase a vehicle, on the C book it will be mentioned that you have taken a loan, that the bank name will be mentioned. Then insurance, the vehicle has to be kept comprehensively insured for at least market value or at least 10% above the loan amount, okay, whichever is higher. And bank's interest will be noted in the certificate of insurance and insurance policy. So in this chapter, just understand what is meant by on-road price. Okay, so that is important because based on that only banks sanction loan, usually around 85%.